The 4-step method to high performance trading is a free download to help traders build their mindset routine to improve their trading performance in live time. The 7-step daily routine for high performance traders is about developing the daily routines and processes to help traders continuously develop and get 1% better a day in all areas of their life. They are both free downloads. The links are in the description box below. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today I want to carry on our theme of keeping things simple, rinse and repeat. The theme is simplicity. A lot of traders are getting caught up in minutia and just missing the simple, bigger picture templates. First red day, first green day, day zero opportunities, inside day, signal days. We're going to go back and just understand the initial balance and opening range. Look at some 3-day setups. Day 3, Wednesday's day 3 on the front side of the week, which typically, if we have an opportunity, will culminate in a 3-session setup, a New York session. New York session for me, the 3rd session. Now, first red day, page 58 in the playbook, we had some textbook simple models this week. We had a great first green day opportunity on a couple of different instruments. We had an inside day opportunity on the euro. Simple, clean, textbook perfect. We also had a day zero template. Now, there are multiple instruments you could scroll through. We'll just look at a couple simple things. I really want to hammer home the understanding of simplicity. You could have a small basket just of 4 or 5 major currency pairs, maybe a couple of cross rates, but keeping things simple. These are not complicated templates. We're looking for the same templates each week on different instruments. Not trying to figure out what an instrument's doing this week so I can trade it. I'm looking for the simple, repeatable templates for the easy trades. Tuesday we had a first red day signal on the Swiss franc. Monday closed in breakout. It's a new month. We have breakout traders triggered into the market and closing out of balance or outside of the range from Friday's high. Peak formation high made on Tuesday before breaking down and making a lower low, and a marginal new first red day and an inside day. Now that's a signal day. How does price behave on the day? Peak formations are up. This market could very well easily continue to trend. But lo and behold, we get a peak formation in Asia, a peak formation in London, and a peak formation engulfment closing at 10 a.m. in our New York session. First red day signal. We have a peak formation Monday, Tuesday, and 1, 2, 3 peak formations made on Wednesday, day 3. For our parabolic coil. Now this is a 1-hour time frame. And what does that tell us? If a 1-hour time frame is potentially setting up, we have higher time frames driving this move. We're not even going to look at the 4-hour. We have our 1-hour thesis in place. Now, how is price behaving on our shorter time frame? Peak formations are up. We have our consolidation sideways into 10 a.m. We had 10 a.m. major red news, but again, an opportunity to either position yourself with a starter and a very tight stop loss. We can get our risk down to 10 pips if traders wanted to wait for first bar or a first bounce opportunity. Remember, first bar, first bounce are momentum news catalyst opportunities in line with a higher time frame. Page 101 in the playbook. Always need a higher time frame setup to be positioning ourselves in the market with a news catalyst opportunity. Remember, it's a momentum-based trade opportunity if it's a first bar catalyst. That can keep our risk at 10 pips, positioning ourselves in that trade with the thesis of it now collapsing towards the low of the day on the first red day trade setup. A pump and dump template, Swiss franc, simple, right out of the playbook. Page 19 in the playbook. Pump, first red day signal, and the dump on the backside of the week. The euro was an inside day on Tuesday, but let's go back to the beginning of our new month. We have a high of the week in place, and the market closed in breakout on Monday. Dumping down and closing in breakout. Tuesday's an inside day. Now, new month, thesis can be that this may be the peak formation low of the month. If it's not, we're going to break through that. But we have an inside day, and the inside day is a signal day for one of 2 potential type of opportunities. A reversal from the breakout of one side, a trend trade continuation from the breakout of one side, or a false break reversal targeting the other side of the inside day. page 69 in the playbook, I want traders to think about something simple. The new month is starting. A new month is starting a new timing cycle, and we've gone through this. If you go back and look at your daily charts and look at the rotations of new months and how directions of markets can change, the inside day can trap traders on the wrong side in a new month at the extreme. I want traders to go back and understand the importance of the false break on an inside day, whether it's at a week's extreme, but a new month most importantly. So we have a peak formation low, and we have a market now that is dumping down into our low of day level, right into our timing window, right into our 9 a.m. hour opening. But I want traders to look at this. We'll blow this chart up while we're here. A pin hammer reversal at the close of 9 a.m., closing at 10 a.m. Higher time frame chart. A pin hammer at the low of day level after breaking an inside day. That's the mentality of understanding higher time frames, stepping in and positioning themselves in the markets. We come to our 5-minute chart, and the market has a 3-bar engulfment right at the low of day level, just as our second hour is opening. An opportunity for traders to position themselves in the markets with a starter. New York Open confirms inside of our basic model for trade entry criteria, page 29 in the playbook. The idea behind the basic model for trade entry criteria is to remove analysis paralysis. It's non-subjective. We're back inside. So if traders position themselves in the market in line with our higher time frame thesis setup, we have a 1-bar stop. And for traders who are more experienced, the opportunity to be scaling into this coil as it's about to accelerate and explode. Now, I also want traders to understand a false break. Do you notice they did not stay outside of that boundary for very long once they broke out of the low of day level? And that occurred right as the new hour was opening. And on currencies, that's the beginning of a new 4-hour rotation. We have a 4-hour close at the low of day level. If it was going to break out and continue, it would stay outside and pull back. They will not allow traders who are triggered in on higher time frames to be in profit. It immediately explodes to the other side for that very reason, to go after the money. Where are the stops? Where is the money? The explosive false break reversal setup on the Euro USD. And then as we make higher highs on the day, that coincides with the backside of our first green day template setup for the larger dump and pump coil. The inside day also closed as a first green day. Page 64 in the playbook. So repeating that, I don't really care what these bars are doing back and forth. I'm looking for the larger template to set up. And if I miss this trade, the next day I still have a thesis in place for the follow through of the first green day opportunity. Remember, new month, that's the high of our month. We've put in a peak formation low of the month and potentially now targeting the high of the week from the larger dump and pump template. An example on page 20 in the playbook of a larger dump and pump template. You'll notice on both of these opportunities, they don't hang around for long. There could be a news catalyst. Momentum yesterday was just an explosive move. They have traders trapped on the wrong side of the markets down low. You'll notice all the down close candles are down low. That's why it explodes fast. They have them trapped. And then the explosive move on Thursday, targeting the high of the month and headed towards the high of the previous week at the close of November's month. A day zero template on the New Zealand dollar. Now, you've heard me speak about the day zero template. Looking for new weeks or new months, this is where we'll often see this template. And that is a larger 3-day rectangle that forms. Page 84 in the playbook. We have a peak formation high made on Friday. Now, here's where traders need to understand that often what's happened is they're being told that every time it breaks out and pulls back and closes in range, that it's a false break. Nothing is a false break until the opposite side of a daily range is broken. This market is in range expansion until the opposite side of a day is broken. Once the opposite side of a daily level is broken, that can now be confirmed as a failed breakout. Once this market pulls back inside of the range on Monday's close, we now have peak formation high and a peak formation low into a new month and a new week, a new timing cycle. The blue box that I've drawn are the daily levels, and that is where the consolidation will build to help us form a thesis in terms of aligning ourselves on day 3 with a potential parabolic explosive move. Peak formation high, peak formation low, consolidation. When we come to our screen in the Asian session, New Zealand dollar heavily traded in the Asian session, this is on our watch list as a potential candidate. Day 3, we can look for explosive parabolic range expansion trend trades or parabolic reversal trades. So we have our high-low of our US session as a potential projected profit target area. Now this market behaves exactly as a parabolic coil should behave. Remember, it's a 3-day setup. Traders often say, oh, it's risky on a 5-minute. It's a 3-day setup. The consolidation has been built over 3 days, and we have a lower low on the inside of a previous week's range. That is not a range expansion. We're trading back inside of the previous week's range. An opportunity that's scalable, driven by higher time frame traders. The template we just looked at was a 1-hour template that is built up over 3 days for an easy, stress-free parabolic collapse. Now, other cross pairs may offer similar setups when we see the major pairs setting up for this type of opportunity. A large box preparing for an explosive move. Remember, the markets are doing one of two things. They're either expanding the range or reversing the range. Where is the money? We have traders in the money from the previous week, and they're going after traders who may be caught up high from a previous breakout and targeting where the money is. A day 0 template, new month, new week, 3-day setup for the parabolic coil New Zealand session on Wednesday, day 3. A great trade. Congratulations to the traders who executed that opportunity. On Tuesday on the Euro Canadian, we had a first green day signal. Now, if we go back and start from the beginning again, it's a new month, new timing cycle. We have a high of the week in place from last Wednesday. We have a market that broke down on Monday and closed in breakout. Thursday was an inside day, so we have inside day traders potentially now triggered into the market short, and we can project that level across. Remember, if breakouts fail, where is the money? Now, we had a first green day close on Tuesday in a market that made higher highs. Monday is the first day in a new trading month. They've filled the gap that occurred on the open, but also now we have a new high of month in place. But also recognizing that we can now be potentially in a larger dump and pump template if price behaves into the session and the timing window aligning with that thesis. Higher highs on the inside potentially is the setup for the dump and pump. First green day trade. Again, first green day trade on page 64 in the playbook. Now, as our 9 a.m. hour opens, we are at the level, Monday's closing price level. How does price behave? We have a higher high and our engulfment, but also major round numbers. Simple stuff, an opportunity to add into an initial position as this market coils and starts to confirm our thesis. Universal entry criteria, page 29 in the playbook, allows traders, again, 1-bar stop, removes analysis process, just keeps things simple for more experienced traders. Traders had the opportunity, recognizing the reverse head and shoulders pattern, to start adding into a position until it clears the level for a scalable 5-star opportunity. Now, remembering that this is a first green day setup, a low of day, low of session buying opportunity, if indeed it presents in line with our higher time frame thesis. So this is not a 5-minute trade. We're a 5-minute setup aligning ourselves with a higher time frame trade setup opportunity, which is why this trade explodes. It has traders trapped down low on the wrong side of the trade. Day 1, day 2, day 3 explodes and goes higher again. Now confirming a potential reversal on the backside of a larger dump and pump template. And just also another great first red day template on the CAD Swiss. There were several other ones offering one-day opportunities, but also simple rinse and repeat templates. I just want to say a couple things in closing. These templates are the same every week. Some instruments aren't going to have a template. They're going to be potentially in a higher time frame trend or in a trading range, or they just may not set up. But the following week, they may have a perfect template, whether it's a day 0 template, whether it's a first red day or first green day template. Perhaps they're going to offer you just one day parabolic opportunity because of a false break signal. You don't need to get all of them. But one thing I do want to encourage traders to do is step back and focus on simple, repeatable, easy money-making trading setups. If it's not simple, go back and look at these charts on your own screens. These were can't miss opportunities. If it doesn't look simple and set up that clean, it probably isn't. These trades, when they set up properly, explode and they don't come back, and they show up every single week. Keep it simple, traders. If it's complicated and you have to count things and measure things and mark off things, and how consistent can you do that? How can you scale that up in size? Think about that. Grow your trading business on easy, scalable, repeatable trading setups. Leave science projects to the geniuses and the smart people. Have a great day, traders, and may the markets go with you.